Good morning, everyone. Happy Monday. It's Rick here. We're going to talk to you about what's going on in the markets. The number one question: oh, you're in real estate. How's the markets? How you guys holding up? How are interest rates doing? Hey, it's fine because the market's going to be what the market needs it to be. I heard this great perspective in a podcast last week. And the market is the market because that's what the market needs to be able to be healthy, right? And anytime it's unhealthy, it's we overcorrected in one direction to an extreme and it became unhealthy. So having a 2.5% and 3.5% interest rates was overcorrecting to an extreme, it became unhealthy. So it became the extreme up. And then in October, we approached 8% interest rates, and that was an extreme and it became unhealthy. So they lowered it, lowered it, lowered it, and now we've landed in balance a little bit in that equilibrium. So if you're watching this, thanks for watching this. I've got this through StreamYard, so it's broadcasting to multiple different spots. Do me a favor, just like on Wednesday for our Wealth Wednesday, you said, where are you watching it from and what are you getting from it? Give me the same thing here. We're going to spend 3 or 4 minutes talking about what's going on in real estate locally here in the Orlando, Central Florida area, also nationally, look at some national stuff. So let's take a look. Moving first, let's look at mortgages. Mortgages are here, and here's the today's mortgage rate, the update. And this is a national, just through Mortgage News Daily. And so, there could be some different incentives or buy downs or seller concessions. So if these interest rates don't match what you need based on what you need, then you can go ahead and look for some concessions somewhere or look for some grants or something else out there. But overall, when we look at the Monday trend, it's positive. It's a positive trend. It's slightly up, but we're hovering here and we're stabilizing here. It's that 6.15 for the FHA, 6.5 to high sixes there for the 30-year fixed. Jumbo's a little bit higher. Let's look at what that means. Let's look a little more closely at the trends. When we see this trend line here, we can see this is November, and this is the highest, right? This is the peak right here. So if you got your mortgage here, oops, where are we at? Come on. It's got different color codes here. There you go. October 18th was 8%. That's the highest. So since October 18th, it's been 90 days, and right down that cliff. The lowest that we've seen here. What do we got here? 6.62, right? And climbing a little bit, but pretty steady here. And I think you're going to see it hover right here in between these sixes. So this is the mortgage rate we're looking for. We said we were going to see it. We have seen it. It's been an influx of buyers and pre-approvals. What we found is buyers typically, when we look at where it's been, look at the highs, the ceilings, and the floors, right? The ceilings and the floors say we did have 6.16, but overall it's been between 6 and 7 for the last year and a half. I expect it to stay there as well, regardless of what happens. The presidential election is happening this year, so that'll change some things, which is going to be an external force impacting the ebbs and flow of the market. External forces are election years, they are wars, they are COVIDs, they are things that would stimulate or surge an economy outside of just normal spending habits. So we'll take a look at that. So what does that mean in terms of the real estate market? Here's what's happening. This is a monthly report that we get from our board. Let me zoom it in for you a little bit so we can see it. And if you're getting our newsletter, then you get this. And I also explain this as well with what this actually means. Let's take a look. Year over year, December versus December, inventory is significantly higher, right? Which means buyers have a lot more options. In fact, by the tune of almost a quarter. So 1,500 more listings. And this is Greater Orlando, the Central Florida. So hitting the Tri-Counties and a little bit of Volusia, Polk, and Lake County there. New listings taken in the month, 10% more listings were taken in December than they were in the previous December. So that's encouraging, right? And closed sales slightly less. So we have more inventory and less sales, and that creates a stronger gap in these here with the months of supply. So instead of just under 3 months, it's just under 4 months. This is significant. This is doing your supply and demand. Let's look at what this looks like from December to November, because this is where we're seeing actually that the inventory supply is lessening. In November, it was 4, and now it's 3. And next month, when we see it, it's going to be even less than that because we are getting more contracts. Our team, we had a couple listings that were listed right around that November time, and they didn't do anything. And then January, under contract, multiple offers. We had a listing to go live last Thursday, open house Saturday. 4 offers under contract, multiple offers above list price. The time is now. The time is now. And if you have enough realtors on your social media feed, you've probably seen a meme that says, waiting for the interest rates to go down. Then when they do, then you're going to be multiple offers again. And we're there right now. So, get any questions around what that means for you, what your options are, what your purchase prices are, or if you're trying to time the market strategically to list it, I would say you're in the window that says use the motivation outside of trying to squeeze every extra dollar or percent out of it, because the only time we know that when the top is the top and the bottom is the bottom is when it just hits the ceiling or bounces off the floor and bounces around. No one could predict that October 18th was the highest we'd see in interest rates, because for what we knew, October 24th would be even higher. But that 8% was there and then it started dropping. So just talk to your professionals of what do you need to do and where do you need to be for you and for life and for every motivation that hits it. This is a great chart here, and we look at the two highlighted ones. Let me zoom this out a little bit so we can see year over year. This might help. Do we get this here? Barely. We can get it there just ever so slightly. Here we go. So when we're looking here, average interest rates, it's a little bit higher, right? We've seen that. Total inventory, and then we're looking here for total sales. We've already seen this already, but if you want a copy of this whole chart, I can email you a copy, drop it in DM or shoot me a DM wherever you're watching this, and I'll email you a PDF. And this is where you can look at everything side by side over the last 18 months. But we can see the trend lines from condo inventory from a year ago, 800 is now doubled, 500 up to 800. So when we look at the total, 6,100 up to 17, that's that significant in price increase. Days on market going up, but 49 days seems like an eternity when your house is for sale. And the history of it, it's really not, right? 60 to 70 days is still very much there. 1,900 closed sales. It's the lowest that we've seen. Well, I guess January was even lower. So it'll be interesting to see what does this January bring. Because when we look at year over year, it was 2,200 and then dropped to 16. Versus here we are 1,900. Will we drop to 14 or 15? That would be an indicator of how we're doing from trends to seasonality. But this is just a good indicator that says we're still at 4 months, and buyers are back there looking, and the properly priced houses are getting multiple offers. In fact, when I look at what we got, our list price to contract price, let me do a quick math. That we got over the weekend was 3.5% above list price. Multiple offers, 3.5% above list price. When it's priced well in a good, nice house and marketed well, then you're going to see it go. Let's take a look at our final mark that we want to look at, and that's the ORA, the Orlando Regional Realtors Association. Looking here at this market watch, let's see if I can expand this out. Nope, that's okay. So we've got the last 7 days, residential properties, what we're looking at, and there's been 1,500 new. Now the MLS, the matrix, it's taken over probably about a third of the state. So it's a very large area that the matrix and the MLS is taking over here. A lot of Tampa is hit here as well. So 1,500 brand new listings, 1,700 price decrease. And so we're still seeing the trend of more price decreases than new listings coming on. 400 back in the market. So they reset and they came back in the market. And we had 800 sold. So when you see 1,500 new listings and 850 sold, this tells us the market inventory is expanding, which gives more options, which should stabilize or slightly decrease. My hunch, my prediction is we're going to start seeing a heck of a lot more get under contract. In fact, here you go, pending. So the pending versus new listings really match, right? 1,468 pending, 1,579 new, and we'll be able to see those pendings move over to closings as well. So that's just a real quick glimpse of what's happened in the market. Overall, moral of the story: interest rates are stable and they are steady and they are fixed there in that 6% range, give or take, 6.25, 6.75. There's your window. Market is warming up. It's encouraging to see activity happening. It's encouraging to see buyers off the fence. It's encouraging to see multiple offers and not just price reductions needed over and over and over again. That again, the right priced homes are going. couple final things I want to share with you, what we have coming up to help you navigate this market. You can always check out information at theviselyteam.com. That's our website here, and we have it connected right to our events. And our events tell you where we have right to our Eventbrite. We've got some things coming up that you might be interested in, or maybe someone you know is interested in. Tomorrow, excuse me, we're doing our networking group and business to business group. So if you're a business owner or entrepreneur and want to have some mastermind and collaborate with other people in the industries or whatever industry you're in about good business, then check us out and you can RSVP here. This Thursday, we are doing a first steps to home ownership. So if you or someone you know is thinking about buying in this market and not sure where to start, encourage you and love for you guys to join us there for it's on Zoom. You can do it from the comfort of your house or wherever you're going to be for a home ownership workshop. So check that out. And then every month we'll be doing these workshops. So this is once a quarter. And then if you want to sell your home, we have that in February, and investing in real estate, we have that in March. So a lot of education stuff, a lot of good networking stuff. So if we can be a resource for you, let's make it happen. Guys, that's it. I told you 5 to 6 minutes. I went 11. So much to talk about, but that's the age-old question. You're in real estate. How's the market? There's how the market is. If you liked what you heard, give me some feedback. Let me know that. I appreciate it. If you want to hear something different or for me to spend more time or elaborate somewhere, drop in the comments. We'll communicate. We'll talk about it. And I want to be a resource for you guys as you make your decisions specifically around real estate or building wealth in real estate or protecting your wealth through real estate. Let us know how we can help out. All right, everyone, take care. I'm Rick. Happy Monday.